Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the performance of both local and international equity or stock markets for the 6-month period ended June 30th, 2019. And it has been, to be fair, quite an impressive performance over the past 6 months, both at the international and local level. So let's turn firstly to the local markets. And for that 6-month period, the All-TNT index, or the Trinidad and Tobago Composite Index rather, was up in this red line just around 7%, which is quite impressive for a 6-month period, as well as the All Trinidad and Tobago Index increasing just around 5.6%. Now, the All-TNT Index accounts for just about 67 or 2/3 roughly of the Trinidad and Tobago Composite Index. So that performance of that 7% upside was, in fact, influenced quite significantly by the cross-listed index, which was up just a shade under 10% for that 6-month period. And driving those performances, or driving the performance of the local market indices, were several stocks. LG Williams B was up just around 33.3%, Prestige Holdings up just around 29.3%, CIF, which is not on the index per se, but it was also up a very impressive 20%, GMMB up 19%, or GMMB GL, and First Citizens Bank up 17.8% for that 6-month period. Outside of the first five, but still with notable performances, were NCBFG and Republic Financial Holdings Limited, two of the largest banks on the index, and stocks, in fact, which also recorded double-digit returns in terms of stock price. On the other end of the spectrum was Scotiabank, which was down just around 3.3%. We had Calip down 3.3%, Trinidad Cement Limited down 6.6%, Guardian Media down 15%, and National Enterprises Limited down just about 17% rather for that 6-month period. Now, switching gears to the international markets, and it was an even more impressive performance when we turn to international equity or stock markets. And on average, they were close to double-digit or very significant increases across all major regions. In Asia, excluding Japan, markets were up just around 9.6% in that green, compared to a 5.8% return in the prior comparable period. Latin America was up just around 10% as well, and that's a very stark comparison to the 12% decline in the first half of 2018. Europe was actually up 14.8%, and the US a very commendable 17.3% for this first half of 2019. Now, turning to the US, you could have invested in any particular sector using a sector exchange-traded fund and made money over the first 6 months of this year. The worst performing sector, which was healthcare, was actually up just around 7.1%. The second worst performing, energy, was up just around 11.1%. When we look at the best performing sectors, information technology, or the technology sector, was up just around 26%, and consumer discretionary, which shows an increase in consumer confidence, was up by investors, at least, would show that it was up just around 21% for that first 6-month period. When we switch gears to Latin America, good news here as well. Notwithstanding a swoon sometime in May of this year, which it would have given up pretty much all of its returns for the year to date, Latin America ended just around 10% up, as mentioned, with broad market gains across most major regions. Chile was the worst performer, and we use that loosely. Country up 1.5%. And on the other end of the spectrum, Colombia in US dollar returns was up just around 18.4%. Now, when we take a look at Asia ex-Japan, again, it was up very significantly, just around 9.6%. And despite all of the saber-rattling surrounding China and the US and trade tensions, etc., China was up just around 27% for the first 6 months of this year. So quite a stellar performance there. Hong Kong up 10.7%, India up 10.4% on the heels of very positive election results, at least as seen by investors. South Korea was up just a meager 0.4%. So again, equity markets seeming to broadly shrug off all concerns so far. And Europe was the same case, up around 14.8%, with broad gains across most markets, including Germany and France, which were all up just around 16%, just over 16% in US dollar terms. So what can we expect going forward into the second half of this year? Is it a good time to just sell and relax and enjoy the returns that you've benefited from thus far? Or should you stay in the game? Well, some potential second half events, locally at least, will include the delisting or the eventual delisting of Sagicor Financial Corporation. And this would come as part of the arrangement between Alinvest and Sagicor to eventually list on the Toronto Stock Exchange. So that's something that investors would be looking at, and the Sagicor coming off the Trinidad Stock Exchange as well as the Barbados Stock Exchange. Of course, the financial or the fiscal year 2019-2020 budget, which occurs later in September or October, is also anticipated, as investors will be looking on to generate expectations and anticipate what could happen in stock markets going ahead. Increased construction activity, which has been ramping up over the past few weeks, should also be of significance to the local market. The resolution of any of the Atlantic LNG Trade 1 talks should also give some further guidance to the stock markets, in particular TTNGL. And of course, the very long-running saga that is the Whitco stock split, which has been approved, and we're just awaiting that split to take place. Turning internationally in terms of second half events, well, some major themes which will still continue to influence markets. U.S. interest rates, which have taken an about turn since the start of the year. We're now expecting an actual cut in U.S. interest rates before the end of 2019, and that has boosted investor expectations and sentiment about international markets. Any resolution to the U.S. and China trade standoff will be positive, or should be positive, for markets. On the downside, U.S.-Iran relations, if they continue to sour with threats of sanctions, etc., could place some dent in investor optimism and investor sentiment. And of course, as we head towards U.S. presidential elections in late 2020, we'll be looking out for news that could potentially shake investor confidence as time goes by. That's it for this week's Bourse Report. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. Check out our website at bourseinvestment.com. And have yourselves a very wonderful investing week. This has been the Bourse Report.